Welcome back to Let It Grow Investing. I am Jeff. Thank you very much for being here. And we've got tons of news that we need to get covered today and talk about that awful collapse that we had on Wednesday. I am trying to do this screen in screen so I can actually present some of the stuff that we've got going on out there. Some of the things that we're looking at in this investing challenge portfolio that we're looking at right now. I am very new to using Webull on the desktop. I normally am using it on my phone. That is pretty much the only way that I trade on Webull. So I did want to sign into this one. E-Trade, it works, but it's got a lot of my own account information on there. So I'm kind of trying to figure that out to hide some of the balance information and account information that is a little bit personal. So I do have this one pulled up, but we had an awful Wednesday. That was prompted after earnings from Google, from Tesla, a lot of things with AI, with concerns about the consumer. We definitely want to cover that. We want to still look at what's going on in the race for the presidency and see what's going on there. So a lot of different things that we have big concerns about, and rightfully so. I think a lot of that contributed to the fall that we had on Wednesday. And then, kind of rolled over into Thursday. We rebounded on Friday. But, ultimately speaking, Wednesday was the big day that shook the market. We definitely were looking at a lot of fear when it comes to the other Mag 7 stocks and just how bad it could be for those, and then how much spillover effect we have into other areas of the market, in tech, in AI, a lot of those other concerns that are really still very prominent out there, and really what we do from here. First up, I did want to take a look at Tesla. I did have that one brought up. I'm going to try to get back over to that right on my screen so we can maybe see what happened there. And again, I'm very new with this one, so I'm going to try to do this, but work with me. We've got this is our actual portfolio here, all the stocks that we've talked about for the past 2 years, everything that we've purchased, and just exactly where it is. There's quite a lot here. I guess if you guys have been following along, this is a real thing. I am actually putting my money into what you guys vote on in the group. So I definitely appreciate you guys following along. Really appreciate the votes that we've had in the investing challenge. I will get right to week 31. We did have 5 stocks this week. Those 5 were McDonald's, Caterpillar, ExxonMobil, Marvell Technologies, and Broadcom, or AVGO. We will be buying, or I will be buying, ExxonMobil, $200 worth right into this this portfolio for Monday, right? I will be buying, where are we? I think we've already got some Exxon in here. I just did it by symbol, sorted it out. And I'm trying to figure out exactly what this means we've got here. And I will try to work with this one. But yes, we do have ExxonMobil currently into our portfolio. I did have a question. Do we still hold Walgreens? Yes, I did look on the actual Webull app on the phone, and it was down about 50%. It was painful. And it's not one that I'm looking to add to right now. There's just too many uncertainties around that one. But if we do pull up Tesla, let's take a look here and just see how bad this was for Tesla this week. We did have some misses. We did have some concerns. There's definitely some things there that are worrisome. At the same time, we've also got that big Tesla energy deal with Intersect Energy. It's a multi-billion-dollar deal. Over the next, how many years was that? I'm sure it's on one of these articles here down in this news section here. We've got to have something. No one really knows what Tesla stock is worth, right? We're really trying to get a valuation as to what all the pieces of Tesla are really worth. Some people want to look at it as a car company. Other people think it's a data company. Some people see it as an energy company. And some people simply see it as a technology company. So we really have a hard time coming up with the valuation. Kathy Wood still says this has like 1,100% of upside by the year 2030. We still see a lot of people saying that the sky's the limit, especially when they start doing the Tesla battery packs, Tesla solar on a larger scale. And now they're selling off, all these platforms to different energy providers in order to get those solar credits out to one, the provider, and two, also the end user as well. So we've got that. Present imperfect, future uncertain. That's fair. Man, but still, if you actually go ahead and look through a lot of these different price targets, they are just moons apart. We've got one low at like 85, and I think we have a high on the street of like 310. I can take a look on my E-Trade. I don't think that'll interrupt anything over here. So yeah, that is still like really crazy to have that wide of a spectrum here as to just what people think about Tesla stock. I'm going to take a look here on E-Trade, kind of behind the scenes. Up about 1.6%. The Nasdaq was about 1% on Friday. The S&P, as I get this to load back to Tesla, I think it was about a 1% gain as well. Yeah, 1.1% in Tesla. So if I go into the analyst research, we do have some highs on the street that make more sense to me. I think I've got the covered call written for 300. I think that was a price point that I had written that covered call for. If you remember, 2 weeks ago, this was probably at 240, 250, and now we're sitting at 219.80. So definitely has come down, and yeah, really a lot of shift out there as to where this was a few months back in the 100s, and then just through the and then right back down. It's a very volatile stock. That is one of the reasons that as it ran up, I wanted to do a covered call. There is a high price on the street of about $310. I think that is doable, right? It just depends on what day you look at this thing. It could simply be 310 one week, and then, hey, we're back down to 250 the next. That's just the way that this one moves. All these little things with Musk looking to have Tesla's board actually invest into XAI for about a $5 billion investment into the AI company X that they are building out right now. So, man, there is a lot going on when you're looking at that. But as far as what's going on out there and really why Tesla and Google sold off, I think there's a lot of different things we have to unpack there. Well, Google had a beat on both earnings and revenue, right? They beat on both categories, but they did trade down, 7% on Wednesday. And some of that was off of slowing demand or slowing advertising demand in YouTube. Now, YouTube numbers still look good, but the advertising side of it slowed down. So there's still more points to a weakening consumer. We had the manufacturers output index that actually shrunk on Wednesday as well. So if we have a score that is above 50, we are in expansion. If we drop below 50, we're in a contraction. And the number came in at 49.5. We were looking at analysts saying it was going to be a 51.5, which meant we were going to still remain in that expansion phase of the economy. But right now we dropped, as far as inventory, production, and there's another category that they look at, whether we're in expansion or contraction. We did fall below that middle ground and go into a contractionary phase of the economy. There's just so much going on and all these things behind the scenes that if you're really not paying attention to one of them, you might not understand why the market's moving. Sometimes you understand all of them and it still doesn't make sense. But I feel in some ways that I don't necessarily know where any individual stock is going to go, but oftentimes I feel that I have gained the knowledge after 10 years of looking at this stuff as to where the market is going to go. Right? Last week I said, hey, I'd probably pull a little bit of money onto the sidelines. It's getting a little rich, a little frothy out there. And yeah, we had a couple bad earnings reports that weren't perfect, right? We were also up against very tough comps from last year. A lot of the things were really selling, things were really moving, and now we're slowing back down. So it's really tough to compare year over year. Some of the things have just run so much this year. It makes it really hard to want to buy some of these Mag 7 stocks after they have had these monumental runs, and we haven't given any of it back yet. So now that we've done a little bit of the give back, I'm not saying that we're in the clear. I still think that the consumer is fairly strong. So, man, we've also got a lot of different things on the back half of the year that with rates coming down, with seasonality in there as well. The summer is generally a little bit weaker as everyone's on vacation, everyone's out doing their own thing. That is definitely a concern as well. So we've got all this stuff going into what's going on in earnings right now, where we're looking at when it comes to some of these Mag 7 names. Could it be a time to buy? Man, I think it probably could be. I mean, we were sitting at 190 on Google on July 10th, and now we're sitting at 167. I still think that the upside on this one is into the 200s. I still think that this is a great company. I think it is trading too cheap. That's my personal opinion. I still believe in this company long term. We've also got, man, what do we have? We had OpenAI. They were still just spending and spending money. I think they're going to spend about $4 billion and be at a deficit of about $5 billion by the end of the year. They are still using a lot of the Microsoft platforms in order to get their product out to people. So that is still another way that Microsoft is making a ton of money. I still think that a lot of these different outlets are going to do really great things with AI, but has it gotten up too high, too quick? And I think for a lot of these names, it really has. But now that we're giving some back, now that some things are getting out of overbought territory, let's see if I can actually do any of this on here. I'm sure I can. If we can do an RSI, yeah, we've got, how do I get off of that? Frequently used, go away. All right, yeah, we got, if this is right, if the RSI on Google is sitting at a 24, that is oversold. And if you can I get this 70 off the screen? 70 would be your overbought, under 30 would be oversold. So if we're sitting at a 24.9, we did oversell on Google. I'm not too sure where that's looking on Tesla. Let's take a look here and see just where Tesla is if they are oversold. 39. So we're below that mid-range. We're fairly valued, but yeah, I mean, if we go ahead and look up, ExxonMobil, what we are going to be buying this week, we're at a 58. So we're right in that fairly purchased stock territory. We're not getting into the ones that have really run too much. There are a lot of different names that are still going to be in that overbought territory. But the fact that we gave back a little bit on Wednesday and Thursday, we're definitely in a spot where I feel a little bit more comfortable entering some of these positions. And I'm definitely going to take a look at a couple of those for this week as well. So I did say we're buying Exxon. We talked about some of the sell-off. We talked about purchasing managers and what's going on out there. We're looking also at gold, right? Gold had reached a new all-time high, and then it kind of gave it a little bit of a break. And now we are looking at potentially still having a lot of the drivers in there for what could potentially be a strong run going forward. As you know, there's a lot of political uncertainty. We've got the Fed rate cuts potentially happening, and then there's still all the central banks that are looking to purchase gold as well. So there are a lot of different drivers there to continue to have gold going up higher. And that's not something that I normally play. I am not at all in tune with the gold and precious metals markets. That is not something that I really follow. I did try to play Barrick Gold before, but that is not something that I am really too keen on. It doesn't really make too much sense for me. But I know a lot of people are interested in it, and long term, I think it is a conservative hold. But I think there's a lot of other ways to make money that are going to be just as safe and have a lot more or even amount of upside. And then there's going to be obviously the other plays that are going to be either better value or more in that growth aspect that I think work better for me. So that's not something I normally do, but that is out there. One that I did enter this week on Wednesday as things were falling off the face of the earth was Soxel, the Direction Daily Semiconductor Bull 3 times leveraged fund. And this is playing with fire. I am completely aware, and you can get punished on this one. I did enter this late into the day, but even as I entered late into the day, this thing still went down about another 6 or 7%. It then did rebound over Thursday a little bit and more so on Friday. So I'm about flat on this one. But as you look at this thing over time, you are going to be playing a lot of the chip names. And, NVIDIA, Qualcomm, AMD, they're all going to be mixed into this fund, but they're also going to be 3 times leveraged. So if they go up $1, this fund would actually take it up $3. But at the same time, if you've got it's going to be the inverse relationship on the downside. So if you're losing a little bit on Qualcomm, you're going to be getting pummeled on Soxel. It's just how it works. And it is definitely something that you're kind of, you got to know that you're playing with fire with it. And you really need to have a tough stop loss and cut out of this thing if it's not going your way. Because if the market continues to go down, you're going to get pummeled on this one. So I took some of the money that I sold out of CrowdStrike, CRWD. I did sell out of that completely on Monday. I know we were talking about that last time. I sold the original first chunk at 308, and the second run, the rest of my shares, I sold out of at like 268. I do believe it got down to about 250. I'm not saying that this thing is done. Hopefully all the patches are done and fixed by now, but man, CrowdStrike has really taken a lot of people's money over the course of the past, month, right? We were sitting up near 400. We're 380 up here on the chart on the 9th, and now we're down at 256. I did have it was a $405 sell side on CrowdStrike to take a little bit off the table because I thought it was getting a little bit too rich. And I did not want that much money into CrowdStrike, so I was going to trim it. But then I caught it way down here. I did not have a stop loss in place. So if you are afraid of getting wiped out, have that tight stop loss in. If I would have had that set around 350, I would have made a good amount more money. But my cost basis was somewhere down into the 170 range. If you go back to last summer, where was this one? Man, I'm having a really hard time finding the numbers on this thing. This is really all over the place. This was 5.3. I'd have to really go back. And it does it all by hours, which I don't really like. Every mark here represents a 4-hour candle as to what's going on in the market. I'm sure there's a way to change it. I just have not figured it out yet. So I did get into this one somewhere last fall. That was at 67. This might not even be the right time. Anyhow, so I did get out of CrowdStrike. Nonetheless, I still do think that it could have a bright future. And someone that I know that works with CrowdStrike every day, he says, "Hey, yeah, we're CrowdStrike shop. It's the best all-in-one cybersecurity platform that is out there." And he said, "Hey, did you buy more?" No, I closed it because I'm really concerned about the litigation, the legal obligations of shutting down the world for a day. I think that is more of a concern to me than, hey, are they going to rebound within 7 months? I think there's potentially more downside as more and more people have problems. I mean, if you look at Delta, if we take a look at DAL, they were punished as far as what happened out there on Wednesday, that Friday. And then as of even this past Wednesday, I think still a lot of their pilot and employee tracking information was still not back online. So we did really get punished out of this one. We were, somewhere up in the 40s. Now, where are we now? Is this accurate at 44? I am not 100% certain. You guys know I don't follow airline stocks all that close, but I know that they were definitely getting pretty well hurt as to what was going on out there. And yeah, it does look like we're at 44, but I'm not far enough forward on this actual chart here. That's the problem. So yeah, we're 44.13. There we go. And yeah, we were up. If we look back at June, we were up at $50.60. So yeah, we gave it a lot away. We did kind of come all the way down to about 42-ish. And yeah, we're still kind of still down a good bit, probably 10-15% off of where we were at some of these highs. So yeah, definitely something to be concerned about over there. What else? I don't know if I know the ticker for that one. Let's see if I can just search for it. That would be super helpful. LW. There we go. They did have quite the sell-off. This was absolutely brutal for them on Wednesday with everything else going on, all the consumer problems, everything that was out there. Man, this thing took a beating. Now, they are a producer of French fries, frozen French fries for a lot of different fast food restaurants or even just restaurants in general. And a lot of people are still ordering fries when they go out. The problem is that not as many people are going out. So there's looking at weakened consumer demand and how that is affecting Lamb Weston stock. So they missed on earnings, they missed on revenue, they guided lower, they're concerned about the consumer. They went down 27% on Wednesday alone after they came out with their earnings. So they just got completely pummeled. They're down 47% year to date. It has just been brutal out there for Lamb Weston. So one that we also see that this is going to be a problem for other areas of the market. We're looking at other restaurants and how this is affecting them with the weakened consumer, weakened demand. Although when people are going out, they're still spending, they're still getting French fries. There's not as many people going out. So what does that mean overall? It means, well, hey, all these other restaurants are potentially going to have a bad quarter. So if Lamb Weston's hurting, other people that are going to be affected by fry prices or the fry sales are actually going to be hurting as well. So they go down. That doesn't really look well for any of their companies that they deal with on a day-to-day basis. And similar with AI, right? You know, if Google's not making as much, they're not looking as buying as much. They're going to have those ripple effects through the economy. They're not buying as many NVIDIA chips. They're not buying AMD. And then all the people that work for AMD, all the people that provide things for those companies are going to be hurting as well. So that's why we got a lot of pin action based on Google or Tesla going down, is because everyone else that feeds their product, sells similar products, are also going to be hurt as well. In the case of Tesla, let's also take a look at Ford. Let's take a look at F right here. And also brutal. We had a 1460 on the 18th, and now we are at $11.19 here on the 28th. So painful there. Ford, Stellantis, and Dell are among the top 12 large cap losers last week. So also more problems with Dell. We had choppy present as they chase an EV future. I'm still not certain that all of them are going to win in the EV battle. I think we're going to have a few large players in that space as well. And I don't know that everyone's really going to be the top dog in that market. I don't think that all the names that are there now are going to continue on going forward, whether they're new startups in EVs or whether or not they are already large, big names. I don't think they're all going to take that share. They're all going to be fighting over a lot of the same market share as well. So Ford truck sales still fine. They are doing more in the way of rebates. We're seeing more and more of that. I was at the Mecum auction in Harrisburg on Friday. A lot of people there. There was definitely some money being spent, but a lot of cars that didn't meet the auction reserve, and some of them selling for cheaper than I thought they would have. So definitely still buyers out there. That's not going anywhere. But I do think that the market has softened in general for a lot of collector things. And you even see it in watches. Rolex sales, a lot of those prices are declining, although a lot of the sport models are still over retail prices. There is that third party market that is still strong. But it is definitely weakened demand based on the consumer, based on the amount of money that's out there and just how the economy is doing right now. So we've got all that kind of wrapped up, right? We've got investing challenge. We talked about Ford, Tesla, GM, similar situation there. They also reported this week. Let's take a quick look at GM. Pull that one up. We've got gold. We looked there, purchasing managers and the sell-off on Wednesday. I do think that a lot of these are going to start to rebound. STLA. Man, Google. Wait, no, that was G. I typed it wrong. That's what's going on. I'm like, that doesn't look right. General Motors. Let's take a look here. See if that doesn't do it right. We got Lamb Weston. We talked about that. CrowdStrike, I told you guys I'm out of that one. Tesla, I was looking to buy more of that. I did do some other buys this week. I told you guys about Soxel. There we go. There's the GM fall that we thought about. That might not even be it. That's the 25th. definitely got coming back down from this this $50 share price down to about $44. So again, another 10+% decline on the week. And yeah, that's what we got there. So we've got what else did I sell out of? Take a look here. I know CrowdStrike was the big one that I did close. And then when it comes to what did we buy? Oh man, now I forget how to use E-Trade. That's unfortunate. I know I was buying Verizon. I bought some Sentinel One. I think that one actually did trigger. Trading. Let's get back over to orders. That's what I need. I did buy some more. I know we got that one. We got. Did I buy more O? I know there was an order in for that one. I don't know if that might have been trying to get more of that 6% dividend yield on O. O is still open. Google's still open. What did execute this week? I know it's a pretty long list. I was doing some shopping. I did not buy anything at Mecum other than a hat. I did buy a hat, and it was on sale. So it was a $5 hat, and that was my big expenditure up there. Target, I bought Verizon, bought Soxel. We told you about that one. Google, Visa, did buy Broadcom, Tesla, Amazon, more Verizon, more Sentinel. I sold out of Redwire. We were talking about that one in the Facebook group. If you're not a member over there, please go ahead and join. Get your votes in for every week of the investing challenge. And also, if you got any questions, feel free to bring them up over there. We got out of CrowdStrike, bought some more Next Era, bought some more Arbor, trying to get more dividends there. I think that's about it. I think that is about it. So definitely moving a good bit of money this week, trying to reposition, trying to take some of these dips and drops in the market in step with Soxel, really trying to trade out of that one. Google, yeah, I still think that is an undervalued company. And now my phone's listening to me because I said Google. We've got Broadcom. I still think the chip space is going to be strong. But I guess that brings us up to week 32 on the investing challenge here. And I am going to try to get back over to Webull. We'll take a look at this one as well. So this time last year, we did buy Next Era Energy. So I'm going to take a look at that one. I do think that this has run a bit. Obviously, I just said that I bought some more this week. I do think that utility companies are still going to be a safer play in this market. There is still a decent amount of upside on this one. I still believe it's around 10 or 12%. I am going to go back over to E-Trade so I can actually navigate this a little bit better. But I will try to flip-flop through the two here for us. So Next Era still, when you're looking at solar, when you're looking at energy, I still think that Next Era is going to be a great way to get growth out of a utility company, the most growth out of any of them out there right now. It's fairly valued, but I do believe that this company is going to continue to grow going forward. So NEE is going to be number one. We looked at it last year. It might make a little bit less sense this year as it has run up significantly from that time. RSI is at a 55. I still got that pulled up here. So it's right in the middle, not overbought, not oversold. And I think it could be a decent entry point. I don't think it's a screaming buy, but I think Next Era is a good company to own for long-term holds. You're going to get a little bit of a dividend, nothing to write home about, and you're going to get some gains as well. So that dividend is about 2.81%. I'm looking over at E-Trade as well. PE sitting at a 20, trailing 12 months. They're making money. I think the growth factor there is ready for them. So number two, we're going to get back over to Tesla. Now, again, I still do believe in Tesla long term. I think that the energy sales with Intersect is going to be huge for them. I don't know that a lot of people really expected them to win this. So I'm thinking long term between robo-taxis, from all the data that they're collecting, from the energy that they're producing, the battery tech that they have. I still think that they are going to be the EV company to be caught, as similar as NVIDIA as the company to catch when it comes to AI. So Tesla, I am comfortable buying this thing. Like I told you guys, man, why did it bring up TS? That is not the right ticker, TSLA. Did it do it again? Tenris? I don't even know what Tenris is. Tesla at 219. I did add to this one at 215. That was my limit buy. I am comfortable with that. I think long term, this is going to continue to grow. It is going to be a volatile stock. It is going to be a battleground stock. I understand that. I'm aware of that. And I think long term, it will win. So I'm still in it. And yeah, if you're up for it as well, go ahead and get your vote in either on Spotify, on YouTube, or on one of the Facebook groups that is going to be in the chat or in the show notes. Number 3, I did just mention it, is going to be NVIDIA. 113. And, I know I said under 100, probably in the 90 kind of price point is where I was going to be looking to buy this one. Well, I don't know if we're going to hit that. I really don't. I think there's too much growth. I think a lot of the numbers are looking for just massive revenue growth over the next 2 years. So I really don't know how low this thing's going to go. Man, if it does get down to that 90 price, I will definitely be buying. The PE is expensive. The PEG ratio is low. Well, the PE is 65.7, but I do believe that it has been traded cheaper than that. But right now, it's looking expensive. But they also didn't have the growth in AI as exponential as they did in years prior. So we've got around 26% of upside on NVIDIA when you're looking at 41 different analysts on this one. Low being 90, the high on the street is 200. So if you get to that average price of 142, man, I mean, that would be 1427 pre-split. That seems just so crazy. But at the same time, I still think that the revenue and the growth that they have is just off the charts, monumental as far as what NVIDIA can do going forward. And, you still got a couple people out there saying that this is going to be a $10 trillion stock by 2030. Jim Cramer is one of those saying that it's going to hit 10 trillion. And we do have others saying that as well. AI is still definitely being purchased, being built. I think there is going to be a lot of volatility in that space until we get to kind of, that growth phase being complete. And then we kind of have that cash cow business of AI. And yeah, we're still a long ways off from that. So we're going to be in a complete growth phase for the next 5 to 8 years, I'd say. And then we're going to try to get into more just the cash cow businesses. Not that NVIDIA is not already there, but some of the software, hardware might not be at that stage yet. Number 4 is going to be Google. GOOG or GOGL. You can also call it Alphabet. It's at 167. I think that's too cheap. I'm going to switch back over to E-Trade real quick. And hopefully this computer is keeping up with all the screens, everything I've got going on here. Hopefully it is. I think we had a little bit of a problem last week, but I did try to shut down a bunch of other stuff that is in the background. We do have around 22.8% of upside on Google right now. Low price is 170. So even if we only go up that $3 from here, we still have positive upside. And that high on the street being 240 represents around 43.7% of upside. And that average 22.8% of upside gets you $205. So that's what we got there. I think I've talked about this one so in depth. Really, I think that YouTube is such a driver for them. I don't know that the advertising is going to be gone long. I think as, some of that consumer demand kind of washes away, it's going to be coming back as we cut rates, which could be as soon as September. There's a lot of talk that could be when we start to cut rates. We might get to this year. And yeah, I think a lot of people are going to have more demand out there for a lot of things as rates start coming back down. So that is number 4, Google. Number 5, I am hitting all the heavy hitters this week because I can't put NVIDIA in there and just let it run away. So I have to throw in an Amazon, a Google, a Tesla, and NextAir is going to be they're going to be up against some tough names this week. But Amazon is going to be our largest position in this investing challenge portfolio. I think we've bought it around 9 or 10 times at this point. But yeah, Amazon, we're sitting at 182.50. I still think that this thing has plenty of room to run. AMZN, they own everything. They do everything. They're in all aspects. If not, you better hope that they don't enter your business because then you're in the crosshairs. There's about 23% upside here. We're at 182.50. Average price is 224.60. Low on the streets, 200. High on the streets, 250. So even the low side, you're getting about a 10% bump up from where we are right here. I am comfortable buying this, holding this, sleeping well, knowing that I have Amazon stock. I think I told you guys that I bought this one this week. If I didn't, I probably will buy more this week, and I'm good with that. So all of these stocks with NVIDIA, Google, Amazon all have above 20% of upside. Tesla is probably negative, but man, that is a tough call as to where this one goes. The uncertainty in the valuation, the uncertainty in the company. I still think that there's a lot of room of upside there long term for Tesla as more and more of the businesses develop and turn into that cash cow that they need them to be, whether it comes to cheaper EVs, the Cybertruck, the robo-taxis, man, the energy side of the business, everything else that is out there. And then for next era, what is the price target there? I don't think we covered that one. We are looking at, drum roll, about 7% of upside. So average price target being 79.63. Someone has a low at $36 on next era. That is insane. That's not going to happen. I don't see that happening. I mean, and maybe it could happen. That's probably not the right word. I don't want to jinx it, but I don't see $46 happening on next era. If it does, I will be buying it, and the high price on the street is 95. So that represents a 28% of upside, and only 19 analysts, and not as many as the other ones. Obviously, Tesla, NVIDIA, Google, and Amazon are going to have all the coverage out there, and NextEra is going to have a little bit of less. But yeah, other than that, I think you might have seen it if you're following along on Facebook. I do have a link in the description if you want to help out the podcast. I am partnered now with First Form, which is going to be a supplement company. So it is 1stphorm.com/letitgrow. And if you're really on a health journey, if you're worried about building protein, cutting out some extra pounds, if you're looking for some supplements to try to help you operate at the best you can possibly be, please go over there, use my link. It will be in the description. And you can simply just, use my link, and I will be credited for that purchase. So I definitely appreciate that, whether it be vitamins, supplements, greens. I definitely like the Opti greens, the aminos. I am taking those daily. Those are definitely helpful. And I definitely recommend their products. I've been using them for a long time, and I would definitely appreciate you guys checking them out and using my link. That would be awesome. And I've also got links in the description for E-Trade, for Webull, that we're doing the investing challenge for crypto.com. Crypto's still looking strong. I think that Bitcoin could have another run higher, as both presidential candidates that are left in the running at this point are friends of crypto. So I do believe that that Bitcoin, Ethereum could still be a good purchase at this point in the game. And I think that's all that I got for you guys this week. So NextEra Energy, Tesla, NVIDIA, Google, and Amazon are going to be in the investing challenge this week. And we are buying ExxonMobil. So that is the 5 that I got for you guys this week. What's going on in the market? What's going on with Wednesday? How the Purchasing Managers Index brought down the market, as well as Tesla and Google, and why I think we could potentially buy some of these Mag 7 stocks with the amount of upside that they have and the growth that they have long term. I don't think that the consumer is going to fall off the face of the earth. I do think that we're in for a little bit of a slowdown, but we might get some relief as soon as September, as we start getting some Fed rate cuts, potentially 2 of those this year, and hopefully the consumer remains strong. So that is all the time that I got for you guys today. Thank you very much for stopping by. Hopefully this whole thing with the Webull portfolio is actually showing up here. I think we covered a little bit of everything. You can see the names that we looked up on the left. Some of them were mistyped. I did have TS in there and G in there, but we did have a lot of coverage that we were looking for. on the market here. We covered more here. We've got all of them that we talked about on the show. And yeah, that's it. That's all that I got time for. And I will catch you guys in the next one. Thank you very, very much for stopping by. Please make sure to like, subscribe, and share. And if you need some help getting started, feel free to reach out in the chat on Facebook, or send me a message on YouTube or the Spotify link, and I'll try to help out as best I can. So thank you guys, and I'll talk to you soon.